The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' tune means it's time yet again for the Option Block, your bi-weekly source for all things options related. My name is Mark. That's pretty broad purview to have here on the show. All things options related, but we'll try to live up to it. My name, of course, is Mark Longo from the OptionsInsider.com as well as the Options Insider Radio Network. And I am joined today on the old All-Star panel, a truncated All-Star panel yet again, but still a fun one. We have two regulars joining us again today. Starting off with a guy who's been everywhere but on the panel lately, good old John Grigus from Options Express. Mr. Grigus, how are things in the land of Schwab/OX/Grigus?
They're pretty good. Yeah, Schwab's got me doing 1.5 million things, and one of those include going down to Indianapolis for a conference about a week and a half ago. So that was a follow-up to my Iowa junket, where I got to see the corn, and then got to see the corn in Indianapolis, and then I sent some pictures over to you and Andrew earlier today, and pretty much it all looks the same. Looks like crap. So there's a drought in the Midwest. Buy corn, buy wheat.
Yeah, those are some impressive pictures you sent over, and listeners, you can't see them obviously, but they were of some young children posing against the same corn crop a year, two different pictures, 1 year apart between them. And in the first picture, there's this very robust corn crop that dominates and towers over the children. A year later, the kids are obviously a little bit bigger, but the corn is far, far smaller than even they are, and definitely dried out and just a withered husk of what it once was. So that certainly puts into stark relief exactly what is going on with the corn crop here. So by all means, lift every offer possible in corn. There we go.
Not intended for a recommendation.
No, of course. Information and entertainment purposes only. Speaking of entertainment, we are also joined on the old panel today by the man, the myth, the rock lobster himself, none other than Andrew Giovinazzi from Maine/OptionPit.com. Mr. Giovinazzi, welcome back to the show, sir.
Thank you. It is a pleasure being here. A total pleasure.
You're just excited because we didn't tell that guy to sell those 5 puts on Zynga last show. That's why you're excited.
I have to admit, you know what? I try to only get burned once in a stock. So I go, you know what? I just can't let somebody else tiptoe down that broken glass bottle screw.
Don't go where angels fear to tread is the moral of the story.
Yeah, look at this. And he would have killed it on his Facebook puts. So
yeah, he would have. Hopefully he did, because it's looking pretty good in Facebook. And with that tease, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, where we break down what was going on the old street today. And unlike a lot of recent shows where we've been discussing a lot of half-hearted market action, shall we say, where the market started somewhat down and closed a little bit less down and couldn't really determine a direction of what it wanted to do for the day. Today was a resounding move to the upside with most of the major indices up well over 1.5%. The S&P up 1.7% on the day to 1360. The Dow up also 1.7% to 12,898. The Nasdaq, a laggard for a change today, up only 1.4% to 2893. And the good old VIX cash turning to the dark side, closing at 17.51 today. And as Andrew alluded to, it's a fun day for us here on the old All-Star panel because there are a lot of earnings coming out after the bell. So we'll just dive right into all of this good stuff. And Andrew mentioned Facebook, a little name some of you might have heard of. I don't know. It's a little bit of a wallflower of a stock. Doesn't get too much attention. But yeah, it came out of the gate strong. Facebook closing today actually down on the day about 8% of the day, or almost $2.50 to $26.95. But in the after hours, it started off very strong, all trading all the way up to over 28, I believe, at one point. Now it seems to be coming off a little bit, and actually appears the bloom has come off the rose, Andrew. Perhaps we spoke too soon on those downside Facebook puts, because Facebook now hovering down a little bit in the after hours, trading down about 20 cents to about 26.75. So I used to love, particularly when I was trading Intel and hedging gamma around earnings, I always used to love those immediate post-announcement vacillations you get in the underlying, because they're usually way off the mark, and it's, as in this case, apparently, perhaps even in the wrong direction. I remember one time Intel moved several handles in the wrong direction, then everyone realized, wait a minute, we're reading these earnings the wrong way. It turned around, went right the other way, and it was just one of the best scalps I ever had, and it was about in 3 seconds. It was fantastic. I never forget my broker's face when he turned around to me and said, "You're filled." I had some ridiculous order way the hell out in the middle of nowhere, and he was excited. I was more excited, obviously. But the Facebook is kind of reminding me of that now, vacillating a bit. But turning to the dark side, Andrew. So maybe we'll start there. Were you trading it up on Facebook today? I know you had your synthetic Facebook going for a while, but now are you into the real thing?
Yeah, actually, I never got it on at the end of the day. I ended up with some classes and stuff. But we had a strangle swap. Mark had a couple of cheapy time spreads, which look like they're going to pay really big tomorrow. So I think there was some good action there between the August and the weekly, and it looks like he's gonna, they're gonna pay okay. So actually, yeah, it's a $2 range. No, now it's $26. But yeah, overall, that's what we were doing. We were just mostly trying little time spreads, trying to take advantage of the crazy volatility in Mr. Facebook.
I didn't see what was driving it down today. Apparently, everyone was just piling on with the skepticism on Facebook, saying that this...
And Zynga,
Well, yeah, of course, Zynga didn't help you, right? And Zynga is a big partner with Facebook. I hate to keep bringing up this albatross for you, Andrew, but it is a current and relevant story for a lot of our listeners.
I've made worse trades.
I think we all have.
Zynga is just one little tiny bad trade amongst many thousands. Me over.
Andrew, what was the trade? Because Sean even came out of the podcast from, just being new to it in the last month, and he said, "Man, that Andrew guy the lobster guy loves the Zynga." And I'm like, I don't recall what the trade was, but I know it's your Widowmaker. I guess
the trade was that Zynga was going to bask in the glow of the Facebook IPO. Yeah. And it sure did. The problem is the Facebook IPO went in the toilet, and Zynga hooked onto the wagon and got flushed right down with it. So I had stopped myself out, but nonetheless, it was hard to be right, but yet still be so wrong.
He was working on the assumption that Zynga was the cheaper, better synthetic Facebook, and a cheaper, easier, lower vol way to play. Essentially, pre-Facebook, there was no Facebook, obviously, so right. It was the way to make the combo, the synthetic Facebook.
Yeah, it worked for like one day. I think there was one day the whole thing was up money, like literally like a dime, and then and
you didn't take your money and run. Oh, you fool, sir!
Yeah, exactly.
That'll teach you.
And I think that was the high tick. It was probably like $9.80 on Zynga. I think it'll be a year before Zynga sees that number again. Easy.
We should, since we're talking about them, we should hit them again because we had someone write in on the last show and say, I believe it was a Zynga 5 puts for 35 cents, or I think these Facebook for 23 puts for about 45 cents. Which should he sell? We all lean toward the Facebook, obviously. Zynga tearing it up to the downside on their earnings yesterday, closing today at $3.17, down 37% or nearly $2. So they came out and admitted already that Draw Something acquisition was a bit of a mistake. They kind of jumped the gun on that. They were a little bit giddy with post-IPO cash and shares and said, we need to put these to work like it's back in 1998 again. Everyone just throws shares around all day and buys stuff. Let's buy this company who's made one app. That hit it big, and it was a huge app for about a week, and then everyone pretty much stopped using it. I think they even admitted in their earnings call the other day that we had to take some unexpected write downs on this one as well, because it's not exactly unexpected loss of interest or something along those lines is how they phrased it, I believe. But yeah, that company from the beginning, just their business model, the way they are constantly upselling people, buy extra radishes in Farmville, it doesn't really engender a lot of goodwill. And Facebook actually has a similar problem. A lot of people use Facebook, but they have a very bad public image. I think some surveys come out recently where everyone listed Facebook as one of their companies they hate the most, even though everyone uses it. So it's ubiquitous yet reviled at the same time, which is interesting. Zynga, a similar type of scenario, but apparently they don't make anywhere near as much money to be able to maintain that model. Of course, another big name did come out this week. I believe they make a lot of fruit. It was Chiquita Banana. And everyone was watching that one, a really big market mover, the banana market. Everyone knows whither the banana goes, so goes the Dow. And no, of course it was Apple. And Apple, it's interesting. You guys were a little confused there for a second. Like, wait a minute, is he talking about bananas? But Apple, it's funny. We always knock on Apple on this show, and I'm sure we will in a little bit. But if you're going to miss earnings, I think this is the way to do it. If you're going to quote-unquote knock everything out of the park, 80% up on iPad sales, 28% up on iPhone, blah, 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 blah. And yet it's just not enough. It's not enough to satiate the zealots out there who just want more. And so the stock takes a 30-handle hit because they're up only 80% in iPad sales. How dare you? So, yeah, this is probably the best miss I've ever seen from an earnings-related announcement. But Apple...
ridiculous. Totally ridiculous. By the way,
product-wise, they got the iPhone 5 coming out right around the corner, a smaller iPad. I mean, their sales are only going to pick up, it seems.
Yeah, they're poised to move a lot of hardware.
Opportunity for 2012. Where are we? What year are we? 2012. Yep.
You think underlying wise or vol wise? I'm sure they've had a bit of an uptick in vol.
No, I don't think the vol's even a buy yet. It's 25. I think there's such huge deflation. We were just discussing. I bet you we see like 19 vol in August before it's all over. I'm almost tempted to wait in and sell some put spreads in Apple. Although I loathe to do it, I think my problem is like all the little Apple heads are just so sad right now that they didn't beat. But it is still. What's their sequential revenue growth? Isn't it still like 40% or 50% year over year or some crazy?
Oh, it's absurd. It's absurd. Like I said, this is the way to miss earnings if you're going to do it. And and we saw too the power of all that cash Apple has, because Samsung came out and sold 10 million of the Galaxy S3, which is an awesome phone, beats at least the current iPhone by pretty much every margin you could think of. I have one on my desk right here. I just got one. And yet, even selling 10 million units, which is huge, Apple still is the world's largest buyer of all those chips. So if you're trying to make a competing phone, you're getting muscled out on the supplier end everywhere you go, because everyone is just selling pretty much exclusively to Apple because they've bought up all their supply. So all those tens and hundreds of billions of dollars they have sitting around in cash, I forgot what the number is. Is it 40 billion now, or I forgot what the exact Apple cash number is, but some absurd amount of money. But they put that to good work apparently by just locking down fantastic and exclusive supplier agreements. Makes it if you're making a competing phone, you can't go get a screen, you can't go get a processor, because they've all been gobbled up by Cupertino. So interesting stuff going on. Yet still, I have to kind of wonder too, just to add the negative Nancy Apple note here, because I agree with you, John. They are going to sell a ton of hardware in the coming quarter with the new iPods and iPhones and iPads coming out, maybe the Mini and all that kind of stuff. So they kind of got hurt this quarter because everyone was waiting for the new stuff to come out. No one was buying an iPhone 4S, let's say, so they're waiting for back to school. They're going to knock it out of the park, I'm sure, next quarter. But it is interesting. I know years ago, in between his time at Apple, before when he left or when he got kicked out when he came back, Steve Jobs made a comment that Apple had a huge lead in the desktop OS department when they launched with the Mac operating system. It was light years ahead of Windows. And they kind of rested on their laurels, and Windows eventually caught up and even surpassed them in many ways. And that really hurt Apple for a long time. I could kind of see a similar analogy going on now with the iPhone, where they came out, they knocked it out of the park. They had the best thing by orders of magnitude on the phone OS side. And now, fast forward 4 or 5 years, and this Samsung Galaxy S3 with the new latest Google Android operating system on it is in every way the equal, not the superior, of the iPhone. So it seems like, and whereas iOS is kind of the same thing it was with a few polishing tweaks a few years ago. So maybe there is something to that cyclical thing happening to them again, where maybe they will be lapped after all. We also had, speaking of tech names that begin with A, we also have Amazon coming out after the bell today. It's a good day for earnings analysis here on the old option block. And Amazon closing almost at 220 even today, up about 1.5%. And in the after hours, they are trading to the downside, trading about 214 and a quarter, so down about almost 6 handles in the after hours right now. So apparently the street not loving what Amazon is up to. They're another one might be moving a lot of hardware in the next quarter with all the new potential tablets and maybe even a phone people are talking about with Amazon. A lot of crazy rumors coming out of Amazon these days. Who knows what's real and what's not. But the street not loving Apple, the street not loving Amazon, the street apparently so far not loving Facebook. Where's the love, Andrew? Where's the love these days? I don't know. Not loving Ford.
Walgreens.
Walker Wag. There we go. A lot of money in prescriptions these days. Yeah, Ford taking it on the chin the other day with earnings. EA, for some reason, getting pounded, down 5%. Electronic Arts today, even though their earnings are not till next week, trading south of 11, I think, for the first time in ages. So a lot of red on the tape today, on a day when most of the major indices
up. Yeah,
we're up 1.5%.
Starbucks is down too. It's like anybody who had earnings today was down, and everyone else was up.
Of course, our good friends Tesla, they reported yesterday as well, John. Both of us. I haven't had a chance to dive back into them in a while. But I had some good memories of trading them from like a year or so ago, or maybe 2. And they came out to the downside as well, down about 3% to 28.13. I will say the other day I was out, I think I mentioned this on the show a few weeks ago, I was out at a mall in the burbs here of Chicago, Andrew, and I saw for the first time in my life a Tesla store in this mall. Granted, it was an outdoor mall, but still, they sell these cars in malls now, apparently, which is a fantastic and also crazy thing to think about.
The new one's supposed to be pretty cool, man. The new Tesla car?
Well, yeah, these things for whatever, 80, 100 grand, they should be pretty cool, you know? But yeah, I've always said that the Teslas are pretty interesting. They need to get that little bit of traction, and maybe these mall stores are the way to do it.
Yeah, well, it's the first run now, but you think about it, you can buy a cool electric car that's fast. Granted, it's 100 grand, but look at a flat screen TV 7 years ago, right?
Yeah, that was 15.
Think about it.
Yeah,
okay,
that was 15,
what's the
20
trend
grand
for the next 7 years? No, I mean, oil consumption's going to go down, natural gas going up. It's got to. Because in 7 years, what's an electric battery-powered car going to cost? It's not going to cost squat. So, I know it's a little bit far down the road for this show, but if you think about it, they are building these cars now, you know, and I think it's pretty amazing that they can produce a product like that can actually deliver on the specs. You know, just one little tiny company so fast.
Andrew, what you're saying is I should be waiting for the Vizio electric hybrid, right?
I guess so.
Because they were the ones that really grew and brought down the TV market. I'm thinking, yeah, that makes sense.
I love my little Vizio 2-seater. It's fantastic for scooting around town here. You know, it's great. We'd be remiss if we didn't also hit on Netflix really quick. It certainly was quite the bounty from an options and a trading and an earnings perspective this week. The Widowmaker striking again, trading around the 80 handle on earnings. I believe the earnings are on the 24th. And, of course, closing today at 57. So down 23 handles subsequent to earnings, down 6% today alone. So, yeah, the Widowmaker just John, are you seeing people come? Are they getting confidence in Netflix again, or were they? Should I say, coming into the earnings, were they starting to blast out downside again, or are people just kind of spooked out of that one at OX?
It's gotten real quiet. A lot of people are moving into other players, and people still talk about it and say, "Oh, I was going to sell it at 300." Something that traders sit around the fire and talk about. But really, we're seeing little to no activity on the phones as far as people trading it. Not with a week like this. After CMG came out last week, and we saw that huge move where it, I think the straddle went off at, I could be wrong here, but $24, and it was down 75 to 80 the following day, and then made another move after that. People were looking at everything earnings this week and trying to play it. Netflix wasn't really one of the big ones. I think the problem with Netflix, and I haven't read all the details, is but they continue to lose subscribers. And Google Play, I just picked up a Nexus 7 tablet, and they have a Play Store where I can get movies from now.
Yeah.
And Amazon, and there just is a lot of competition. I still subscribe to Netflix, but I haven't watched anything in about 6 months. So I'm just, just handing over.
I watch stuff on Netflix. It's the only stuff where I let my kids watch anything because, you can control all the content.
Yeah, I my kids watch stuff like, 20-year-old cartoons, but, I went through the content last week, and I just couldn't find one thing to watch. I guess Mark Sebastian in his 80s, movies would have a field day there.
Yeah, he loved the 80s repertoire. How many times can you watch Cobra, though, really?
I still think Netflix is, I don't know if it's going to deserve any kind of big multiple, but certainly they got the distribution all set up, so...
John, I agree with you. I haven't had a chance to play around with that Nexus 7 tablet. I hear it's fantastic, but I have the Samsung Galaxy S2, like I said, same store there. And I also I'm an Amazon Prime member, so I have all this. I got it for shipping, but I got all these free movies and TV shows with it, kind of as a bonus. So I have very little need for Netflix. In fact, my little guy was in my office the other day watching exact same thing, 20-year-old cartoons on Amazon Prime free streaming, discovering things like Richard Scarry and things that I haven't seen since I was a kid as cartoons. And I think he even watched H.R. Puffin stuff, which I think as an adult is kind of scary. It's a disturbing show. But
yeah, even Tom and Jerry from the 70s and 80s, my son's like, why is he smoking a pipe? Why is he smoking a cigarette? Why is that,
Why is he hitting that mouse with a cleaver?
Yeah.
You mentioned CMG. We didn't touch on my favorite, the stealth Apple as it used to be. Of course, I think it's not very stealth anymore, nor is it very Apple-like anymore. They got their wings clipped pretty aggressively. This is really the first major, and they've been very much on the Apple trajectory for years now, just blowing through earnings. We joked on the last show maybe Qdoba might be finally encroaching on them, and apparently that is the case because they closed around almost 400 even on the day of their earnings and closed today at about 290. So off $110 over, when did they come out? They came out on the 19th. So over about a week, the past week, they've been clipped well over 30% on this name. So just a stunning turnabout for the tinfoil wrapped burrito company. Apparently, it's expensive to make organic type burritos and all the hormone free cheese and everything else that they do over there. Interesting. This is the first real downturn. They've been on a straight shot to 400 since they were trading 50. Actually, they did do one retracement because they IPO'd around 40. They traded all the way up to about 150. I remember because I was trading them pretty actively at the time. Then it clipped all the way back down to almost 50 again. And then ever since then, it's kind of never looked back. And it's just been on a meteoric rise. And apparently that meteoric rise has come to an astonishing and explosive, indeed apocalyptic end. So yeah, if you were trading downside, and this one, as I'm sure a lot of our listeners were, this is a. Hopefully you were well. You had some hedges on, or you were well outside that. I don't know where that straddle went out at $25, $35. You said John, the CMG straddle.
Yeah, we usually look at it, right before the earnings come out, and we usually try to put on an earnings game. We didn't do it this earnings season, but I think that's where it was going out, and I think it was down $75 the next day to begin with.
Amazing.
And then the other $30 happened in the last 5 days, down $6.50 today. So definitely would have paid out that day.
It's probably one of the worst straddle sales in history, earnings straddle sales. Of course, a lot of that was weekly, so maybe you got some salvation by the contract just going away and ending the pain, saved by the bell, literally. But if you did front month, yeah, you're feeling that all the way down. That's an aggressive one. So perhaps on that downer note, we'll close out the old trading block for today and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, where we parse the interesting options activity that was lighting up the old tape today. And we're going to kick things off with a name. We just talked about a very, like I said, the wallflower name itself, good old Facebook, because not enough people are talking about Facebook. But there was some interesting flow out here today. Of course, Andrew, I'm looking at it right now, and it looks like if this continues, that guy may not be looking too happy on the 23 strike. It's trading almost 24 even right now.
Yeah, I think I don't know. We'll see where it goes. We'll see.
You heard it here first, 19.5. There we go. Done.
19.5? Well,
nah, I'm just teasing you.
Hey,
giving our listener a little bit of some fits to enjoy the show with.
It can go to wherever it wants to go at this point, but it looks they smacked it pretty good. I think the rosy revenue projections. Obviously, they must have said something that everybody liked the initial news, and then all of a sudden they started talking, and now they don't like it anymore.
Yeah, exactly. They said, wait a minute, we can't make any money on mobile. Oh, wait, and that's all of our users.
Yeah, I heard there was some concern, too, whether Zuckerberg was going to be on the call or not. And if he was on there, it would have shown the importance to the shareholders that he was in there to make money and not just to have a free and open social media website. But I don't know if you guys could see whether he was on there or not. I'm trying to find out.
No, people play this crazy Zuckerberg watching game, like it's like when people used to watch Greenspan's briefcase. Oh, it's thick. It's a rate cut. It's the same kind of nonsense. I don't put much stock in that.
It's always good for TV, though.
Oh yeah, Fed announcement imminent. Oh, here comes the briefcase. It's 3 millimeters thicker than last quarter, therefore it's a cut. Yeah, so Facebook had some interesting flow today, as you could imagine, just lighting up the old tape. They've been averaging about 170,000 contracts a day. They did well over almost 670,000 contracts today. So just a ton of paper. Somewhat surprisingly, actually, very even call put breakdown here. There was no bias one way or the other. Given the fact that Facebook was off nearly 9% today, you think there would be a little bit of a bias to that paper flow, but apparently not. People seeing equal opportunities to buy and sell here in FB. A bunch of some interesting trends we noted here in Facebook, courtesy of our friends over at Trade Alert today, was that at least throughout most of the session, the early half of the session, about 8% of the volume that was going up today was pretty much all in the weeklies that expire tomorrow. So one-day options, essentially. People were trading dailies in Facebook. So you're talking roughly almost 50,000 contracts of just essentially lottery tickets going up in Facebook for what's that? That I guess puts some muscle behind the argument for a daily contract, because apparently people want it. They want to do stuff in and around these event type contracts, and they want short duration. So apparently there is at least some market here for these very, very near-term contracts. I know we see that a lot on the futures option side as well, where of the vast majority of their weekly option volume comes in the second to last and last day of the contract's lifespan. Usually that's concurrent with an or a crop report or something along those lines. A very a similar thing that we saw today in Facebook. We also saw the puts, the 25 puts and 30 calls, which kind of gets to again what we were talking about, people having some interesting but lack of overall bias in the paper flow. They were both leading the most actives on the day. At the time we wrote this up, there were about 15,000 each of those, going up for about 60 cents a pop. At the end of the day, let's look here really quick at these front day 25 puts. They went up 33,000 times today on the July 25 puts, the one-day puts, and these 30 calls also went up, 42,000 times almost on the day. So it has increased quite a bit even since this was written. And at the time we wrote this up this morning, the biggest trade was a massive sweep sale of nearly 8,000 AUG 25 puts for $1.25. And as of right now, the stock's trading 23 in the order. So this guy is not too happy. But interesting. This is, like I said, this is just a very early snapshot of the paper flow going up in Facebook. Obviously, a lot of stuff went up today across the board. But John, you have any interesting? Maybe I don't want to creep into your Express Block or anything. But any interesting FB trades going up on the old desk today?
A lot of bullish stuff. Surprisingly, a lot of people selling put spreads and buying out of the money calls. I know we saw Zynga, and a lot of people just think Facebook is different. And on the other side, we also had, I hate to say this, but that type of Facebook customer kind of re-enter. Okay, I got screwed on the IPO. I still have some money left over. Let's play it smart and safe and do an earnings play on Facebook. So we saw a lot of new clients or new traders that came out, and every time they ask me, they're like, well, what do you think Facebook's going to do? I'm like, one, I can't give you recommendations, and two, I'm not dumb enough to play earnings, on any stock, let alone the social media one who's reporting earnings for the first time, ever. And they're like, okay, you're bearish, okay. And then they, they just read into whatever I said and we go ahead and put something on. But we saw more bulls out there on Facebook than we saw people looking at downside. And like Andrew said, we got to wait till tomorrow. I've seen things move and then retrace overnight. People, read into the conference call possibly a little bit more. They see something in there they like. Retail is really not going to move it around. It's going to be something hopefully institutional overnight that able to move it further down or back into the positive. It was positive when it first started. We'll see what it looks like tomorrow morning.
Would you say the bulk of those OX orders that were coming in, were they pretty much all playing in these one-day options as well, these super mega lottery tickets?
Yeah, as much as we like to poo-poo the one-day options and stuff. I mean, a lot of people were doing that. July week 4, and I'm like, there's an August week 1 out there too. Don't care. I don't want something that's 8 days out. I want something that's 36 hours. So 80% of our calls that were Facebook plays today were done in the first 1 to 2 weeks, and mostly July week 4s. So there is a demand out there. Whether it's smart for the industry as a whole, we'll remain to find out.
I know a lot of industry proponents tend to poo-poo the dailies just as getting too close to gambling at that point. And it kind of, particularly in this environment where everyone's slamming derivatives left and right, it's kind of hard to make that argument that these tools are for legitimate hedging and defensive purposes when you have such a short-term contract like that. So I think a lot of people are worried about the visual of that contract, let alone the actual use case of it.
Yeah, it's hard to use that overused phrase of the purpose of hedging and controlling risk without laughing a little bit, knowing you're coming out with something that's going to expire in less than 24 hours.
Well, to put some a finer point on what you just said here, those, like I said, those July week 4 30s went up 42,000 times versus the AUG 30s, though actually the second week, even just 1 week in. So yeah, you're right, 8 days. That's way too long. They only traded 6,000 times, and the actual AUG 30s went up 13, nearly 14,000 times. So a little bit more love for the regular front month there. But interesting to see when they start implementing that change across the weeklies to add the full strip, how that'll impact this as well. Maybe, of course, given this activity, it looks like people just want this very, very near-term stuff, which, in the defense of some of these traders, this is what weeklies were designed for. They were ostensibly supposed to be designed to buy around earnings events and things like that. They've turned into a premium seller's dream, way beyond what anyone ever considered when they were designed. But they were designed they were designed originally for scenarios like this, where you can come in and get a free play. And I joke about them being lottery tickets, but this is exactly what they were designed for in many respects. And speaking of design, we have a company here that designs a lot of glass materials. You might have some of their stuff on your phone or some of the other devices you have around your house. Perhaps that shiny new Nexus 7. I have to check that out one of these days, John. I hear that's quite the new device. It's selling out like crazy. So, but yeah, we're talking here not about the Nexus 7, unfortunately, but about Owens Illinois Inc., ticker symbol OI. They closed today down about 5.5% or $1 on the day to $17.58. This is a name that usually does about 700 contracts a day. They did nearly 15,000 today, so it's not Facebook paper, but it's pretty sizable paper for a name like Owens, Illinois. And what we saw is this stock came out kind of a similar, this is the refrain of earnings season this quarter, is they came out with earnings yesterday and just completely screwed the pooch. They were down 5%, over 5% today, and over 10% since yesterday when they announced their earnings. The stock's taken a pretty decent pounding. They were trading north of 19 when the earnings came out, and like I said, closed today at 17.5 roughly. So a bit of selling, let's say, in good old OI. But yet, despite that drubbing the stock has taken, someone apparently thinks this is a resounding buying opportunity. We saw someone piling into the AUG 19 calls. I should say multiple someones, really, because it was some mixed paper on this strike. But for the most part, most of these trades were buys, the bulk of them ranging in that 30 to 40 cents range on this AUG 19 strike, with one big block of about 1,600 going up for 28 cents. So someone thinking that OI is being dramatically oversold and is looking to poise for a big move to the upside. There's only 500 contracts open interest on this strike, so this is all brand new opening paper. We also saw nearly 2,000 of the SEP 19s going up as well today against 400 open interest on that strike as well. So someone thinking, whether it's in SEP or August, or I should say multiple people really thinking that this is a buying opportunity here and picking up some upside deltas in good old OI. Andrew or John, and you guys watch this one at all?
Has this been on the show before? We had OI before.
I think a while back, I think we might have had this one on, yeah.
I just think if you're buying the August 19 calls from here, that's a tough road.
Yeah, this is kind of typical option block paper. We joke about the lack of the nuanced size customer out there doing some of this unusual activity, and this certainly may fall into that camp. We're not seeing people really doing ratios or verticals or anything even simple like that, or even legging into some very low-cost bullish risk reversals, nothing like that, just coming out and essentially just loading up on some upside as much as they can get.
Yeah, and, they're buying August calls. They're going to get crushed. And, this is a company where, unless my brain has melted, do they make the stuff for the iPod and all that stuff?
Yeah, I believe they make that Gorilla Glass. This is the Corning. I can't keep the holding companies straight at the top of who owns what and which division does what. But I believe this is also Owens Corning that does all the different the Gorilla Glass you have on your iPhone and the other. I think my Galaxy S3 has it.
I don't know what everybody's thinking about this company though. It looks like a very cheap company. Oh, Owens, Illinois, it's OI, right?
Yes.
They print money.
There you go. You're preaching to the choir with this guy. You're jumping on the upside train as well.
I know the problem is he shouldn't be buying he should be buying the 19s. He should be buying the 17.5 19 call spread or the 17.5 20. He's buying the wrong calls.
Yeah, I feel kind of like deja vu. We've had this conversation a number of times on the show, but it just bears repeating. And it's also good to point this out to a lot of our retail listeners who are out there who keep thinking the size money is the smart money. Someone's putting up 11,000 contracts. They must be relatively savvy in options. And, they're about as savvy as your next door neighbor or your Aunt Martha when it comes to options. They're just loading up on upside and letting the dice roll and come out where they may. So
obviously clear. I don't know what everybody's thinking about these earnings here, but they didn't look too bad. I don't know, not enough to take the stock down 3 handles. I guess there was all kinds of bad forward guidance or some sort of crap that the company came up with.
I think we found Andrew his new candidate for doing stuff.
Well, yeah, I'm looking like the SEP 1720 call spread for $1 or like $1.10 or moving your deltas around a little bit. Because the thing is, the guy's buying the AUG 19 calls, which basically decay at the rate of some nuclear isotope, with 23 deltas. And if the guy wants a 23 delta trade, he could buy the SEP 1720, or he can go out to November, and buy the Nov 1721 for $1.30. Listen, I think the company's cheap, but the market thought it was cheaper. At a 40 vol, I think he's got Owens Corning does trade. It trades 18 and change, and his 19 calls are, they're up a nickel or a dime. And then he's got to try to close them. So he's just got a tough road with these.
Yeah,
I like his idea of
he could have done this so many better ways. You're right. He could have, if he really wanted upside, he could have at least put on a bullish risk reversal so he had no premium risk to do it. I mean, you can do if you want upside, you can do the SEP 15-20 for probably a credit if you really wanted to go that way. I mean, there's a lot of different ways you can do the AUG 19 SEP 15, calendar risk reversal there. There's a lot of different ways you could structure that, And that's definitely a preferable trade to what he did. I know a lot of our listeners write in all the time saying, hey, what would you guys have done in this scenario? So there you go, listeners. These are a number of different ways you could have traded this aside from just outright buying the calls. Even a simple vertical, it doesn't have to be anything crazy, is typically preferable. And you're right, it has the same delta, has the same type of payout probability that this, or a better payout probability than this ridiculous upside that this guy is buying.
This almost looks like a takeout candidate. $2.70 in earnings. This can't be right.
Are you looking at the right one?
No, I'm looking at Owens, Illinois, right?
Yeah, that's the one. Yeah.
I'm looking at 120 and 150. $2.70 in trailing earnings for this company.
Yeah, I haven't looked at the fundamentals. Maybe we'll dive into the Xpress Block here, so we can let Andrew enjoy his love affair and his newfound obsession, his new synthetic Facebook. And you and I, John, will dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. John, I know you're champing at the bit to go talk about all things corn.
Yeah, I'm going to keep corn brief today, but
sir.
There is one thing that I wanted to, shout out to people that at our OX and other broker-dealers and firms that this week we are raising margin requirements, of course, in grains. Went limit down a couple of days ago. I always love the limit down in a bull market because you'll look for something to kind of indicate the run isn't over, and that's when it comes off of limit up, and it came off pretty hard on I think it was 2 days ago. Down a few cents today, 12 or 13 cents, but still, it's when something's limit down with about 10,000 contracts on the offer, and it finds enough buyers to come in and lift that, people are getting squeezed short. But wheat is going to climb up to about $5,200, corn $3,800, and to trade one 5,000 bushel contract to soybeans, going to cost you almost $7,100. So these things that were once cheap are not anymore, and I guess that's why they have a mini contract that is 1/5 the size at 1,000 bushels.
John, you're crushing my dreams. You're crushing my dreams of being a corn baron, John. What are you doing to me?
I know. Can't corner the corn market. So look into the minis if that's a little bit too expensive for your taste. Moving on, there are a couple other future announcements that I do want to get out there. A business decision has been made at OX Schwab to no longer offer the products of 3 foreign exchanges. Working at OX for 6 years, we've been proud that we could offer some of these more obscure ones on the other side of the ocean. These 3 exchanges being the Hong Kong Futures, the Montreal Exchange, and the London Metals Exchange, which I think they were getting shopped around if I'm not too I think we were talking about that a few weeks ago. So those 3 exchanges we will no longer be offering after August 31st. We sent out emails to those clients that traded them currently at Options Express. If they do have positions, they will have to close them out. We will no longer accept orders after August 31st. So if you have one of those contracts on in any of those 3 exchanges and you want to call and complain about how we should keep it, Mark Longo will be taking those calls for me.
Yes, send them all to me here at the Options Insider. I will make the pain go away.
So I mean, the products are not profitable, and businesses are in the business to make money, and so those things are more expensive to support than they are to offer out. Kind of a double-edged sword there, I guess. But what are you going to do? The third thing is. I thought this might be interesting because I know Mark was an SPX trader for many years on the floor. Andrew, you were in there too as well, or at least at some point in the SPX?
Yeah, I was in the SPX for a year.
So we have some metals and energy, copper, gold, silver, nat gas, heating oil, and gasoline, which they refer to as RBOB now, options that will stop trading today. And this kind of goes back to the old pit days. The options stop, even though they all trade electronically, they stop trading at the pit close, or the old pit close, which is about 1 o'clock Eastern, between 1 o'clock Eastern and 2 o'clock Eastern for the different products. The exchanges allow the people that are long these options about 2 to 3 hours to tender their exercise notices. And where the problem may occur there is that if you're short an option, I'm not sure where nat gas, say it's around $3 these days, you're short a $3 put, and it goes off at say 305 or 310 out of the money. When the options start trading, you might think, hey, I'm in the clear. This, I have no chance of being assigned an out of money put, even though it can happen from time to time. Well, the futures continue to trade until about 4:15 Eastern. I'm sorry, 5:15 Eastern, but they give them until 4 o'clock. If the markets sell off in that time, most likely you are going to be assigned, and you're not going to find out until the following day. So we tell a lot of people that are premium sellers in these products on this day that, if they're out of the money, if they don't want to be calling us tomorrow morning to find out whether they're assigned or not, they should close these positions out. The pit or the people that are long these options kind of get a free look, and as long as everybody understands how that works, they make them better traders. But I thought there was something familiar like that in the SPX, where you had kind of have a free look, or be able to watch the futures and then put in your exercise.
You used to have that the opening quotation there. You had some
AM open.
Yeah, you had the opening quotation there, or quotation, I should say, to get down that. But that also is kind of analogous to a situation where maybe you have earnings after the bell on expiration, and you might have some pin risk on the at-the-money strike, and you don't know what's going on. It's kind of a similar situation to that. It's pin risk essentially, and you have to kind of roll the dice on that, as it were. But you're right, the best way to deal with that is just to get the hell rid of it before the day comes when you have to deal with it. But interesting stuff. I mean, and I was in the SPX, I was pretty ruthless about closing out any strike that was even close to the at the money. Even sometimes brokers used to hate me. Like, why are you closing out this 3 lot that's 200 handles away? I said, just humor me. They used to love seeing me coming.
The thing is, if you only have to, I was just talking with a client today where, as much as you go over with people, close your short contracts that are within sniffing distance of a settlement. And like the one time you don't, you have a trade that made some pretty good money, but if you get hosed on the settlement, you're down a bunch of money. It's just not, the only way you can guarantee you're not going to be assigned on a short contract around a settlement price is to close it. And nasty things can happen, especially in a market that's this illiquid. And we have weeklies every week now. For the 2 cents to close the contract and the $5 or whatever, the $3 a contract or whatever the price is, close it. You should close them. That's all I'm going to say.
Well, I had to tell you the willpower to do such a thing, to buy to close a virtually worthless option on Thursday afternoon for a nickel. And they're like, oh, I got 50 contracts. It's going to cost me $250 plus commission. And then you talk to them the next day when, they're cash settled and they're losing 10 times that. And they say, I just took a $2,500 loss as opposed to a nice winner. Even after that type of experience, it's still really hard for people to do. It's human nature, I guess.
You close to alleviate risk. And that's just, and I've seen those things blow up so bad. That's all I can say. And then I can tell people 10 times, and they don't listen, and then they get mad because we didn't make them close a contract that they should have closed. So
Yeah, 'cause they're certainly not going to blame themselves. I mean,
well, some of my clients are good. They know because I tell them 500 times that they should listen, but I can't make anybody do anything. So we can yell at them over the phone, which sometimes we do, but because they're, for the most part, we have a lot of good traders. It's just the routine of closing and exiting is not. That is just. I think for a lot of people, it's a lot looser than the entry, and when you leave a contract open, it's still an open contract. So I agree that people should close, but.
Words to live by. When you leave a contract open, it is still an open contract. I love it.
Yeah, and it can happen in the equities, and it can happen in the futures options. So it's an equal opportunity destroyer.
It can bite you anywhere.
If somebody has an underlying that they can look at. I mean, you're closed for trading. Think of the disadvantage of having the option shut down, but 15 minutes of underlying trading going on. I mean, that's almost like that's giving somebody a free call. No pun intended, but it is. It's a free option to exercise something.
Yeah, and I like the futures and options too because, okay, so it's out of the money when the pick closes. It moves maybe slightly under your strike. Now, is the person who's long savvy enough to exercise and capture maybe that small profit? And you get to watch these, and you say, well, do I, partially hedge this position on the assumption that I might be assigned? And you get to watch those futures all night and worry about it, until the opening, and then find out if you're assigned the next day. I mean, it's not worth the headache.
No, definitely. Take it off. Moral of the story. Moral of this show. Take it off. All right. Thank you for that, John. Yep. And because we have been gabbing for a while, we're going to skip over the strategy block for this week and dive right into an abbreviated Around the Block.
Around the Block.
All right, and those car horns mean it's time for one last look. Actually, we're going to look a little bit back, I think, in today's Around the Block, mostly because we want to look back at what's been happening with the earnings we talked about at the top of the show. Starting off with good old FB. Looks like they seem to have found some support on that 24 handle. They've been bouncing around it for a while, trading around 24.5, 24 3/4 right now. So the worst, for at least for now, is over for Facebook. They seem to have settled into that range. But then again, I know you guys poo-poo this, but what if you were one of these guys who were long those calls? Maybe not the 30s; those are going out worthless. But maybe something a little bit closer to the at the money there, and the one-day calls. And we had this limit order book after hours that they could close out existing open interest, and you work a sale when this thing was trading whatever. I think it got up to 28 something after the bell there, and you could have closed out a position for a nice little profit and been laughing all the way to the bank. So there you go. Perhaps an argument for the limited order book after hours for earnings. Interesting stuff. I know that's a very contentious topic. We won't get into it today. But Facebook trading 24 in the orders roughly. Amazon trading right now at, if it will load, which it doesn't want. There we go. Amazon trading about actually down about two handles, trading about 218 roughly on the right now. So closed at 220, trading about 218 right now. So apparently the worst is over right now for Amazon as well. Yeah, perhaps they're saying, wait a minute, I can stream HR Puffin stuff for free, my Prime subscription. Why am I selling this thing? I should be buying with both hands. And the buying frenzy has begun in earnest. So a little bit of a turnaround for both of those names, even though they are still off their highs from the day. Andrew and John, obviously we have Eurozone still weighing on the markets. Of course, earnings seem to have taken the center stage for today. But we still have Eurozone coming in over the weekend, some other things to watch. What are you guys really paying attention to for the next few sessions going into the weekend?
It's all just Eurozone. Just Eurozone and VIX. Not I'm going to say exclusively, but, I wonder if we're going to start, if the EU really does start to fund all this nonsense, issue EU Euro bonds and blah, 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 blah. What's that going to do? Is the boogeyman gone from the EU? So we saw volatility down yesterday. We see volatility down today. These earnings are looks like a mixed bag. So if the market, she can't go down a whole lot and she can't go up a lot, there could be there is some pickings there with the VIX at this level, although every time the VXX gets to 12 or so, I'm going to just say stop selling the juice. So, but I think we could see that kind of number again for the VXX over the next 2-3 days.
Yeah, that'd be something to watch if going into this weekend, if people continue on the trend they've been having for the past few weeks, where regardless of the horrific news that could come out over the weekend, people just don't want to hold any of this premium going into the weekend. So they're blasting out premium and SPX, they're selling VIX, they're selling everything they can get their hands on, which probably a little bit short-sighted given everything we've seen happen over the past year or so, but still a popular trend unfolding over the past few weeks, wouldn't you say, Andrew?
Oh, yeah, absolutely. And we're looking at like the euro just came from 125. So we're like, well, if the EU is going to start buying bonds, and where does it go back to where it came from? So I mean, it had a pretty horrific fall. So do people start taking a little risk again, buying some euros and some euro-denominated paper, or do they buy the treasuries with their 1.5% yield? So I mean, it's probably now, if the ECB is going to back it, that's a little bit more of a decision than it was before. I mean, it was like a no-brainer to stay away from it, but I call him Super Mario, by the way, right now. Super Mario.
Super Mario. Speaking of the treasuries, John, you remember this. Andrew, this is before you came on the show. Last year, about exactly a year ago, on our live program, Andrew, that we did down at the here in Chicago at the Elephant and Castle. You remember we had the guest Tony Batista from Tasty Trade on, and he made that.
He tried to put me in my spot.
He tried. He went on and on about how bonds at the time were the screaming sale of the century. And I saw someone just yesterday called him out on Twitter saying, "Remember a year ago on that live Options Insider Radio panel when you were said to sell bonds? What about now?" And they were mocking him on Twitter for what he said a year ago on our radio show here on the Option Block. I thought that was kind of funny. So I gave Tony a bit of a hard time too. I also
he's going to call a top of a 5-year bull.
I invited him back on too, so I can give him another chance to rectify himself. But interesting stuff. I thought that was kind of funny. But before we go, John, what are you watching here for the rest of the week going into the weekend?
Everything that Andrew just said, pretty much same thing. No, we have GDP tomorrow, and we're kind of kicking it around. I know it's not the economic releases have really taken a back seat to the earnings this week and the previous week. But, it's weird how these economic numbers are now interpreted by the street. If it's a bad number, you expect the market to go down, but then there's other people that expect the Fed to step in with a QE3 or some type of other maneuver. And if it's good, maybe some people like it and we go up. So I think, looking at this chart for the SPX, I mean, we have been in this range where we've made lower highs, and I'm not the biggest technical person, but it's been a trader's market, short-term wise. And I think this GDP and the earnings that we have next week into the first week of August will continue to see some very sideways choppy trade. And, I'd love to get long at some point if we break out of this range, but it just, I don't see any clear picture that's going to be the catalyst for it.
All right, that's going to do it for the Around the Block segment, and that's also going to do it for this episode of the Option Block. I know the three of us could keep going on at some length, but unfortunately we do have to end the show sometime. But before we go, Andrew, what is coming up in the land of the pit that may interest and or intrigue our listening audience?
The land of the pit. We're moving offices. That's still the biggest thing right now. I don't have our new
offices
schedule. Yep, our office is moving. We're making Sebastian do some work. So, we're going to be in the Loop with a fanciful Loop address. And I don't think, I'm trying to see, I've got to look at our list for our latest webinars. Mark is now starting to hold some mock trading classes. It's another reason for the new office. So basically, for option pit clients or people that want to learn, you could go in and trade live just old school. So it actually teaches people how to price options. So we were, good old mock trading. And there's no way to learn how to price options than when somebody hands you some tickets and we turn this, get some stocks starting to move, and we make you quote something. And then after everybody, wets their pants, then they actually start to talk a little bit and things like that. So it's a very good exercise and trying to teach people, when volatility is expanding or contracting, and when you actually want to, be on a certain side of the market. So when you pull up a screen, you have you kind of have a sense of how the options got to where they were. So that little program is going to be building slowly but surely. But that's what Mark has on tap for tomorrow.
It is true. There is no better way. It's like immersion training. If you want to learn a new language, you just move to another country and you're sink or swim. And it's the same thing. I remember my first day striding into the SPX pit. It's a very similar type of feeling. You sink or you swim, and it's a terrifying and yet an exhilarating and effective way to learn this type of trading. And John, what's coming up over in the land of OX? I think you have some site nights and some educational sessions coming up, if I'm correct.
You are, sir.
My birdies are always right.
They are. They never lie until you get them in a cave and they die. We're going to be in Raleigh, North Carolina on August 4th. It's a free workshop from 8 a.m. to 3:15. You can sign up online or you can give us a call. We can get you to the point on the website. Jim Ruzan will be down there doing some trading plans, some site walkthroughs, a little Q&A. We also added a new one here out in Boston on August 11th. If we can, we'll probably get Lobster Man himself maybe to drive down and heckle Jim and Joe from the back of the room. But that's going to be Saturday, August 11th, also from 8 a.m. to 3:15. Sign up online.
Yeah, it's a quick drive from Maine. What's it, about 4 hours? No problem.
From where? Boston? To Boston?
Well, I forgot. I don't know where you are in Maine. I'm assuming you're way out.
I'm only 2 hours from Boston.
You're in the Canadian side of Maine.
No, coastal side. I'm not up in Presque Isle. No,
okay.
Not that far.
But of course, if you want to learn more about any of the topics we discussed on the show today, unusual activity, earnings, trading, strategies, analysis, breaking news on the options market, or any of the other fine programs we have here on the Options Insider Radio Network, then by all means surf on over to theoptionsinsider.com, or if you just want the audio, you can always search for us in Stitcher or iTunes or Zune or anywhere else fine podcasts are purveyed. But unfortunately, that is going to do it for this show. But before we go, all of us here on the old All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.